We've had the central bank governor saying this week that fighting inflation is likely to be a challenge for Nigeria this year, at the same time that growth could top 7% if power and other reforms go ahead. What's your reading of the macro scenario?
Oh, good morning, Alishia. Thank you for having me in your open exchange this morning. Nigeria's inflation is quite high at 12.8 presently, and is not good for a country that wants to attract direct foreign investment. So we expect CBN to come out with several measures that will combat the inflation. First of all, we have an increase in global food and energy prices across the world. And we are doing reform here in Nigeria to ensure that there will be stable prices of food and energy. So, and those reforms is going to come out with inflationary pressures. So the CBN is faced with trade-offs. And the trade-off is the trade-off between combating inflation and allowing growth, and also exchange rate and foreign reserve. So CBN is going to create a balance between the two. But we expect the government to come up with the initiative, especially on the agricultural sector. And those initiatives is expected to include interest rate rebates and credit guarantee schemes. Those things will ensure that the prices of food and prices of energy, when our refinery is reformed to ensure 100% production, that the energy prices and food prices is low.
On the inflation rate front, what kind of activity are you anticipating on that front? Because we did see inflation reach its fastest pace since August 2008 in March, touching 12.8%. Are we going to be looking at a ticking higher on the interest rate front?
Yes, I do not expect CBN to continue to hike rates, because continued hiking of rates is going to hurt the economy and affect our growth projections. I expect the government to look towards other directions, just like I said before, towards ensuring that our refineries are functioning and even building further refineries to ensure that the prices of petroleum products is cheaper here in Nigeria. And I expect them to intensify effort towards the agricultural credit guarantee scheme, and also interest rate rebate on agricultural sector to ensure that food production is high and prices continue to remain low.
So certainly a focus then on broadening that, broadening the focus and turning away from just increasing interest rates. In the meantime, on the currency front, we see the Naira coming under continued pressure. Reasons for continued pressure on the Naira there, because we had the successful conclusion of the elections last month said to help alleviate some of the pressure, and that now seeming to be pretty short-lived.
Yes, the successful completion of election, especially as it was free and fair, is going to create an enabling atmosphere for foreign direct investment. Our oil production currently is high, around 2.1 million barrels per day, and we also expect oil price to remain relatively high. So the central bank is in the correct position to maintain exchange rate stability towards what it is now. So I expect on the short and medium term for exchange rate to remain within 3% band of 1 naira 50 per dollar.
What's the situation as you see it when it comes to the reserves front on that side? Because we've had the IMF warning that the Naira could become subject to intense speculation if the country's foreign exchange continues to fall. On the other hand, we had Central Bank Governor Sanusi saying that dollar demand is set to return to normal, and that should mean no more draining of reserves moving forward.
Yes, just like I said earlier, the central government is in a better position to keep the foreign exchange at what it is currently. First of all, we have oil price at relatively high price, and we also have increased production of crude oil. And the post-election era is going to be predominantly foreign direct investment. So we expect the CBN to be in a better position to defend Naira, and we also expect the foreign reserve to start recovering. Though I expect the CBN to create a balance between the two so that not to trade off completely.
Well, when it comes to the money market specifically, let's take a look at reasons behind the decline we've been seeing in interbank interest rates.
Yes, recently interbank interest rates dropped from about 11.25% to about 8.5% now. This is as a result of increased liquidity in the system occasioned by AMCON swap of non-performing loan. So the banks that are tight in liquidity has been able to use those bonds to get funds from CBN through the repo window. So that has dropped interest rates in the system tremendously.